All right. Thank you all for joining our webinar series. Today's topic is auto claims under pressure. And we got amazing panelists here today. We'll talk about this topic. But before we get started, just quick intro about InsurTech NY. For those of you who don't know us, we run multiple programs to help accelerate innovation in the insurance industry. We run different programs, such as what you see in front of you, startup programs, which includes early stage competition, InsurTech Match, and MGA Lab. The applications for both programs just closed a couple weeks ago. And for those of you who applied, hopefully we'll let you know about your status soon. And we also host a number of education networking events, such as this webinar series that you came to join today. But we also host executive roundtables, our annual conference, and other community events. And we also have a fund where we use the funds to invest in seed stage insurtechs. And one of our biggest activity we do once a year is called the InsurTech Spring Conference. We're hosting it in New York next year, April 5th and 6th. This is our, I think, 7th time hosting it. And we'll be doing it Chelsea Piers again. And it's a lot happening in the insurance and technology space. And we believe we're at a crossroads, and we're going to talk about that at the conference. So hopefully you can all join. The registration link for the conference is up, and we're at probably the highest discount that we offer anytime. So if you plan to join, buy your tickets now. So without further ado, I'm going to hand it off to David, who's going to moderate the speakers. We'll talk about auto claims under pressure. David?
Thanks, Tony. I really appreciate the opportunity to present to you today. This has been really a challenge for the last decade. Everyone has talked about how both personal auto and commercial auto has been a area of challenge for profitability for insurers. It's led to insurers losing billions of dollars in a given year. But with all that concern and consternation, there still hasn't been a miraculous silver bullet. So we have three experts in both mobility and claims that are going to help us understand, given the underwriting decisions that we already made, how can we better manage claims in order to optimize and improve our books. So I'll ask each of our panelists to do a 15 to 30-second introduction, and we'll just go down the line. So Ling, then Dylan, and then Chris, and then we'll jump into the discussion today.
Hi, everyone. Good morning, good afternoon, depending on wherever you are. My name is Ling. I am the Business Development and Partnership Manager for Samsung Electronics America, supporting the financial services industry. And that by mean it includes the banking sector, insurance, insurance payers such as Humana, Cabot, Cigna of the world, and then the four big accounting firms such as Deloitte, Accenture, and so on and so forth. Prior to joining Samsung America, I was with Samsung Malaysia, also supporting the partnership effort and reporting to the regional HQ in Singapore. And so coming into this United States market within the FSI and being able to compare, with the Southeast Asia market has been truly eye-opening and really fantastic. I don't know about everyone, but every time we participate in webinars or conferences or events like this, people always come up to us, Samsung, and the first question is always they ask is, what is Samsung doing in this space? Like, aren't you guys just a consumer product? But the answer is no. We play a huge space in this B2B as well. And so that's me in a nutshell. And I look forward to having a great conversation with my fellow panelists, Dylan and Chris. Over to you, Dylan.
Thank you. I'm Dylan Brand, CEO and co-founder at Slate Risk, a new E&S MGA. Before that, I've had 20 years of experience in the property and casualty insurance space. For some of those years, I had the privilege to work with Chris Bodeker when he was a client, when he was working at Uber. And I've worked in primarily the claims and operations side of the business now for the vast majority of that time. Chris?
Hey, everybody. Chris Bodeker. 30 years doing claims, which is hard to believe. I was 20 years on the carrier side. Joined Uber in 2014. That's when I met Dylan. I was the first head of claims at Uber for 3 years. Worked at Marsh, worked with some tech forward clients like Tesla and Lyft and Airbnb for a period of time. Was the head of claims at Waymo for 4 years. And for about the past 2, I have worked at Reserv as VP of Claims Consultancy.
Okay, well, thanks for the introductions from each of the panelists. I think we can jump right in. So the area that is really important when you're looking at a claims book is to understand what it is in the current moment in time and what it will be based off of the actuals that occur compared to the reserves that you have. So maybe Dylan, you could kick us off. Let's say you're brought in to look at an auto book that's running over 100% loss ratio. What's the first thing that you look at, and how often is the problem the operations rather than underwriting itself?
Yeah. So if I have to pick a single metric, I'm looking at days since last activity. And look, the claims are not being closed unless there's an adjuster actually working on the file. So the way that I measure days since last activity is looking for some movement forward in a claims file, each individual claims file with all the exposures that are on that. That way, I'm going to be able to see a few things with essentially one metric. I'm going to see individual performance because I'm going to see things like, is that in how they're comparing with other adjusters? And so is it this person that's just not performing? And if you're coming into a brand new book and looking for the first time, you don't know if there's individuals who are not performing or if it's a management issue that's causing that lack of work, right, that's getting done on those files. Is it because the claim system is terrible, old, outdated, and they have too many in their pending to be able to handle that many claims? Are they just a poor claims adjuster? Are they not given the training that they need? So I'm going to be able to compare from adjuster to adjuster and see where they are. And by line of business, it could be, the commercial adjusters are having more of a trouble than the personal lines adjusters. Is it could be this dedicated subrogation salvage team that's not getting on things and not performing the way they should. So with that one single metric, I'll be able to see individual performance, the management performance, and start to get a picture of what's going on and understanding why these claims are not getting closed timely, which usually any claim that is, the older it gets, the more you're going to spend on it, whether that is through expenses because you have, coverage counsel on it, defense counsel on it, or just because your adjusters are now sitting on this and you're spending more time with your adjusters. So to me, that is the most important one. If I can get a second and third, types of metrics, I'm looking at best practices coupled with the QA results. The big thing there is I want to see the adjusters are incentivized to do the right actions and that they're not gaming the system, essentially. If they're being told, here's the metrics you have to meet, and they're able to just very quickly put in a diary and then push that diary, 7 days and push that diary again every 7 days to make sure that they're meeting the best practices, but they're not actually getting anything done, then there's a failure of your best practices and the enforcement of those best practices. And then I just want to know the number of exposures. Different companies call it different things, whether it's an exposure or a unit of coverage, whatever you might call it at your company. I want to know how many claims in that form, not just the raw number of claims they're getting per adjuster per month. And I want to see the trends on that as well. Getting staffing right is an important part of this. If you're not staffed appropriately based on the technology level that you have and the number of automations you have, you certainly, that's a management's fault when you have a failure.
Yeah, no, I think this perspective on the metrics is really powerful, like taking this, simple idea of days since last activity and realizing that it's not just a individual claim metric, but it's also a management level metric. and it can be compared as benchmarking as well. So I'll definitely have to borrow that one, Dylan, and I can tell you, at least for the MGA that we own, any of the claims that have been paid over the policy limit definitely had problems with days then slash activity. So can appreciate that one.
That's the thing that leads you to those extra contractual damages, right? Which is what the nightmare of every actuary. The actuary said, "Hey, I did so perfectly. I've priced this. I nailed it." But then you get hit with $1 billion verdict, and everything changes. Right? Everything's ruined. All their hard work of getting the pricing right was based on the actual risks associated with those class codes. Whereas that extra contractual loss comes in and it just kills your boat.
Yeah. So, building off what Dylan shared in terms of the specific metric, there's also signals. So, Chris, what are some signals that, claims leaders miss until it's too late? And where do some of those signals hide in the numbers?
Well, I think that the beginning that you talk about, did they have the availability of granular metrics? Like are they able to diagnose a problem? Again, I've been in claims over 30 years. Claims always gets blamed, right? But are we able to drill down enough to work with the team members and identify the actual problem? I've seen a number of circumstances. Again, I've seen in MGAs where the message that transmits down to the claims handlers is, "Hey, you're paying too much money." And when people are, take that into their own hands without a clear, marching orders of first off, what is the precise problem and what's the remedy we're trying to execute, I can go into all kinds of different issues. I thought of a couple of specific problems that we went through and were able to drill down to the feature, the issue, and the remedy that we could test to make sure that what we were working on was really impactful. The first one when I was at Uber, and Dylan knows this one pretty well. Again, we had a metric that was time to the next trip. When someone was involved in a collision, if you can't use your car and you can't drive and you can't pick people up, you're not making any money for you, and you're not making any money for the platform. We saw a huge point of friction in this process of the driver presenting their documentation that they maintain collision and comprehensive on their own policy. And again, even trying to explain to someone what a declarations page was a fairly Herculean task. And what we ultimately ended up doing was coming up with a solution, working with partners to secure a means that verified this coverage independently of use of the driver, and helped improve our cycle time significantly. The second one that I'll bring up and talk through about, again, really drilling down to a root cause. Now I work on the TPA side, and we claims third-party administrator, and a lot of our business comes up when there are some challenges, in an existing program. We took over a few years ago a very large delivery program, and a number that stuck out to us was a 15% litigation rate. What we did, enacted a couple measures when we took over the program, and we started putting our handling protocol together of really increasing our time to make contact with these parties, time to make an offer and resolve. We ended up resolving 30% of our BIs inside of 30 days, and found that our average time to pay was about in line with the prior TPA's average time to set a reserve. So just two examples there, but I think that the key is we're talking about here is when you have this granular data, you're able to put together a very detailed plan on what you want your people to do, and then to go back and measure and make sure that step that you're taking is having the impact that you thought it would.
Wow, 15% litigation rate. I mean, that's pretty perilous. I think if they didn't have all those attorney billboards on the side of the road, no one would have to, deal with pain like that. So can definitely appreciate the concept of having granular metrics in order to be able to study and make better decisions. So that leads me to question for Ling is, a lot of carriers are sitting on data that might be in a device, a sensor, some type of telematics data that's extremely granular and they barely use it. So where do you see the biggest gap between available data that the mobile devices collect and what the claims teams actually use?
Yeah, that's a great question. From a Samsung perspective, we come from a mobility standpoint, right? And I know the question is around data, but if we take a look into the auto claims today, the process, the journey has dramatically becoming more complex, right? Modern vehicles contains all kinds of technologies, and they have dozens of sensors that increase on this repair complexity, and they extend a lot of repair times. And if we take a look at some of the reports back in 2022 to today, there are increased in terms of the average time to repair a vehicle, from 21.5 days. Now it's been increased to many longer days. So this creates more workload and also more decision points. Meanwhile, all these carriers, we have all the data, we have information than ever. We know that data is abundance, right? They have all this telematics data, connected vehicles, weather data, repair information, so on and so forth. And I think that the issue isn't about collecting data. I think the biggest gap is getting that intelligence into the hands of the adjusters at the moment that they need to make a decision. So, in my point of view, the industry has invested heavily in collecting a lot, more information and data, but that is not enough in helping adjusters execute with those information in real time. If we take a look at field adjusters' role, right, they wear many hats. They switch between multiple devices. They have to return to their vehicle or their home offices to finish documentation, or wait until the end of the day to upload photos and notes and things like that. And so this creates a lot of delays, duplicate work, and a lot of opportunities for information to be missed. And when you think about delays are being present, it will inevitably impact this customer experience journey, right? Because believe it or not, today's policyholders, drivers, everyone, they compare the insurance experience to, their last hospitality experience, Amazon or Uber, or if you walk into a premium restaurant or hotel, they want that transparent and confidence in this journey. And so I think that being able to help your adjusters execute and do their best job in the field is what matters.
Sure. No, makes sense if you have the right data collection apps on the field that the adjusters can do things in more real time. But Chris, given your perspective at Waymo, I would be curious, like, were there things that were put in place because, essentially the vehicles knew everything about the intersection and the time, so you had, much better clarity around subrogation or causation?
Well, I think you go back a ways, even whether it's at Waymo. I'll talk a little with my time at Uber and my time at Waymo. I think one of the key things is getting other people in the industry to understand your product and what you're trying to do. Whether it's going back to Uber and having to explain to people that no, there's not a list of drivers, and no, there's not a list of vehicles, and that we're underwriting by yeah, attributes rather than individual folks. To the Waymo period of something as simple as how do we go and um, how do we address the requirement to carry uninsured motorist coverage en route to pick up a customer when there's nobody in the car. And I think that the key that I found to all of this is really going overboard on educating people, whether it's putting together a visual aid to help folks understand your product and what makes your product unique. To again Uber and Waymo, we've been on different road shows of speaking on panels, presenting to insurers, and hoping to get people to understand the same vision that we have.
Yeah, no, makes total sense. So I just wanted to make a note for the audience that we do have a Q&A function. So, if you have questions that you want to ask the panelists, feel free to throw them in there, and I'll make sure to incorporate it either as we go through our flow or, towards the end of the discussion as well. So now that we've kind of centered around what you do to analyze a book and what's available and what's not, the next logical step is how do you actually fix a claims operation? So maybe we'll start with Dylan again. When you look for an opportunity to turn around a book, like, is there a single change that can move the loss ratio faster than others, or is it a lot of little things?
Yeah, I mean, obviously it's a lot of things, and I'm going to say something that's incredibly unpopular. So usually it's kind of come down to, management is responsible for the actions and any failures. I mean, that's just what it comes down to. There's a few random instances where there's individuals making poor decisions that are against all best practices and cause extra contractual losses. But other than that, the vast majority of it is really the management's responsibility. And while people don't want to hear this right now, in a world of where we're saying, hey, let's be able to have adjusters and any employee do a lot more with technology than they could without it, it really does still come down to people. People are still resolving those claims. So staffing is the very first thing that I'm going to do when I get into a rough book. I'm going to make sure that I'm hiring some incredible, we're talking world-class top performers, adjusters who are going to come in and they're going to resolve a whole bunch of the ugly files. Their first month there, they're only looking, we're going to go through the data. We're going to see things that have a very high day since last activity that I just mentioned earlier. We're going to get in those files and we are going to make offers. We are going to resolve claims. And what that's doing is protecting you from those extra contractual losses that you may have later because you didn't touch those claims. So coming in there and resolving those is going to have a long-term effect on your book that you're not going to see. It's not going to be pretty. All your metrics aren't going to look amazing just because of that. But I'm going to come in, I'm going to hire these people, and all they're going to do is close out claims that should have been closed a long time ago. Then we're going to start tackling all the other core problems. Some of that is of course going to be technology based. It's going to be getting great data. It's going to be the feedback loop with your actuaries and your underwriting teams. There's a whole lot to it to get it to write it. But the very first thing I'm doing from the claim side is resolving the ugly claims. Also, anything that is misreserved, I want it reserved appropriately as quickly as possible so I can get a real idea of what we have on in this book. And we're going to get settlement authority out so that they can resolve those big nasty ones just as much as the small and mid-sized ones that just have been abandoned. Essentially, they're not being tended to. And then we're going to start implementing changes so that we're resolving those claims earlier, much earlier, first call settlements, because again, it makes a huge difference in your long term. And of course, I'm mostly talking about BI here, but I have come across some books in my time auditing, as a consultant, and seeing that there are books of business where, especially non-standard, where PD is causing significant number of lawsuits because they're just not coming off of shop rates. They're not doing what they need to do to resolve these matters. And they're spending a lot more money on the PD because they're now having lawsuits associated with property damage, which is just crazy. That needs to be eliminated. If you see that, eliminate that immediately. You should have, effectively a below 1% litigation rate on property damage. It should be like below 0.01% of your property damage claims should have any kind of litigation. So that's a big deal. And people say, hey, what else? What can you, if you're in a situation where you're doing that, what is, I should say, sorry, let me rephrase this. There's lots of individuals who say, I'm going to go the opposite way and fire poor performers. And that just puts you into what I would call a death spiral, right? Fewer claims, all the same claims that you have are now given to a smaller number of adjusters. And those people are now becoming more unhappy and they're quitting. And it's hard to get in ahead of that when you get into that death spiral, because more claims are being opened up, less are being closed. So now a larger and larger number of claims are going to a fewer and fewer number of people. So that firing of poor performers, there's a time for that, but make sure you're getting in some great performers before you do it.
Yeah, no, I mean, all I have to say is, Dylan, is like, where were you at the carrier that I had for homeowners when I went through, my claim that I think took like 2 years to close? I think I probably could have hired you as a consultant and uh, could have gotten a lot of help. But I can appreciate you got to take a little bit of pain in the beginning to get gain in the future. So, Chris, maybe to build on this, you come in and you basically have to make the case that either you're better than their last TPA or you're better than them doing it internally. How do you make that case? Is it your efficiency? Is it your technology? Or is it just, your team understands the business better than, a single carrier can that only has experience with their claims?
I think it's a great question. I think there's a couple things here that that we really want to look at. I mean, I think to start off in the segment that I am operating within the digital economy, future mobility element, I think we can offer a far superior operational expertise, of understanding these different business models and how to set up a program that really is tailored to their individual needs. So there's the expertise part. I think, who we're bringing to the table, we're going to staff our program with experts and adjusters that have that similar expertise, and are either dedicated or designated to the program. And then we're going to bring on our operational platform that I think is ultimately going to yield a much greater quality of data than what they're going to see from a lot of our competitors out there.
Yeah, no, appreciate that kind of different layers of success that you can support. So, Wei Ling, one of the areas we've kind of, sidestepped in the conversation that's probably worth talking about is, the specter of fraud, right? Like, I think to Dylan and Chris's credit, they've kind of said, hey, management is the problem. But I think ultimately we live in a world where someone can use AI and create fake damage that never existed. So what can you do given, the device level data that you have and the insights that you have to be able to better predict and mitigate fraud?
Um, from a mobile device level standpoint, just want to let me be clear. This mobile devices, they don't detect fraud, right? Those are the job of the fraud team and AI models that many insurance companies are adopting today. But instead, from a mobile technology standpoint, what we can look at from is it's the quality, the integrity, and the timeliness, the speed of the evidence that those systems rely on that are being captured from our frontline employees, our frontline workforce, right? The adjusters in this case. So if we think about insurance fraud, it generally falls into a few categories. And without getting, I'm not a fraud expert, but on a high level, first there's this opportunistic fraud, right? Someone exaggerates the damage, they add pre-existing damage to the new claim using AI, or they inflate the value or of this stolen property. And then second, there's the stage or organized fraud where an accidents are intentionally orchestrated, or like multiple parties they work together to submit like a fraudulent claims. And third, fraud is not only about manipulating this physical evidence, it's also about exploiting sensitive information. And that's where we sit in as Samsung, because claims data contains valuable information that can be abused if it is exposed. So the identity and data, those are driven fraud. So that's where mobile technology can make a meaningful difference. For example, when an adjuster uses a secure device in the field, they're not just taking pictures, they're capturing this high resolution photos and video. They're recording timestamps. They're recording the GPS location. They're documenting all the condition of this vehicle immediately after the loss. They're collecting digital signatures and being able to securely transmit those information to the claims workflow while it's still fresh. That's the key of it. So the question now becomes like, how do we ensure that this information helps the carrier make better decisions without becoming, another vulnerability, right? It's this a secure device level data will become extremely critical when it comes down to protecting the foundation that this systems depend on, which is the data collection point. So because of this, because sometimes the first touch point in this claims process, it's not secure, and then what's going to happen is a ripple effect. Every downstream decision that is working with this claim is potentially going to compromise this information. So my view is fraud prevention starts before the investigation begins. It starts with capturing all this accurate evidence, protecting this sensitive information, making sure that your frontline workforce has all the secure tools for them to be able to do their job effectively.
Yeah, no, I think it's definitely important to take into account that the data before, during, and after, and timeliness of the data all tell more about the story of the reliability. I think we probably wouldn't need journalists like Nick Shirley to go out and check things out, at our daycares or with Medicaid if we had, real-time information about what was actually happening. So we've gotten a few questions in. So I think we'll probably use the remaining time to go through the questions that have come in and then, do a wrap up. So, first question that came in is, why human, based on the area ratio, and why not AI agents to process this? And maybe this could be one for, Dylan to start with, like, how do you see that balancing act?
Yeah, and when I was speaking earlier, I think that came when I was right after I was talking. I'm not sure, but the answer to me is absolutely want a AI involvement in my claims processes. But since the vast majority of claims right now have very little AI, I know there's a lot of claimed AI usage in the world of business. I've seen numbers of like 70% adoption of adopted some level of AI, but usually that's because it's Copilot inside of their Microsoft 365, right? That's their adoption of AI. It's not actually doing anything for the claims file. And so as much as I want to see that, integrated into your processes, you having your system be AI native, which Chris, of course, is at Reserv, which does that better, I think, than anyone else in the industry right now. They're the kings. And so when you see that, it's amazing what the outcomes you'll get from correctly integrating AI into your claims processes. But the reality is, you want humans making human decisions and humans doing the things that humans do well, which is create connection. Okay. I don't want AI showing empathy. I want a person helping with that claims process. And so, and to kind of get back, I think, to the core of their question is, that comes later. If I'm coming into a book and we're trying to fix this book, it's already messed up. It's probably very old systems, it's old processes, it's old mindset, because the majority of claims are still being handled that way right now throughout America. So since that's the vast majority, I would just say that takes time to really change your core claim systems and processes. Whereas my answer was really related to what can I do right now, which is bringing in skilled humans to do the things they need to do to fix the problem that you're in right now. But I absolutely agree. AI usage is fantastic, and I just want those humans to do the things that they should. Humans are really bad at having a long-term memory or even short-term memory, right? I can't look at a 300-page demand package and say, yeah, I know everything on it within a minute, and I will retain that information forever. And I can't move that information into structured fields nearly instantly. There's a whole bunch of things as a human I'm not very good at, and no human is good at. And the interface with the system is not going to allow me to there's not even a place for me to put all that information that's inside that 300-page demand package into structured fields. I probably have 75 structured fields within that claim system, at the best. And those are not the same things that are in that 300 page demand. So so let's let computers do that kind of work, and let me go ahead and say, all right, talking to the plaintiff attorney, speaking with the insured, and showing them the value that AI tees everything up for me, and I'm able as a human to be able to resolve that claim in a efficient manner and make the decisions necessary to resolve it in a way that is going to, of course, be legal as well, right? We still need licensed adjusters. That is the requirement right now in vast majority of cases. So the combination of those things is really what you want to get to, but that's a long-term strategy for the vast majority of companies. It's not a today type of answer.
Yeah, no, I
If
think
you
yeah, go ahead, Ling.
I was going to echo Dylan on point because I think the question is which decisions should AI make and which decisions should humans make, right? Like to Dylan's point, we don't have that memory capacity. We have all this regulatory compliance. It changes every single time. I'm not going to be able to see, okay, what is Florida's um, latest and greatest regulatory right now. So that all those things we have to depend like this AI to be able to help us. But I think at the end of the day, claims is still fundamentally a human and people business. I can show empathy, but they're not going to help you feel the empathy. If I show empathy, people can feel it. It's really the emotional connection. And I think that's what's going to be very, very important because at the end of the day, being able to retain this talented people and goes back into Dylan's staffing issues, right? We need to retain these talents. A lot of turnover rate that's happening within the adjuster industry, a lot of burnout rates. So we need to be able to retain all these people and have that human interaction because that is ultimately deemed to be the premium experience for our customers.
And Ling, that technology can really improve the lives of the adjuster as well, making it so that they're not only just more productive, but they're much more happy. I don't know a lot of people who really just want to copy and paste data from one system to a different system because they have to work in two different systems, which is very common, or they have some type of vendor where they need to move all the information from their core system into that vendor's dashboard, and it just kills them. Or it sucks the soul out of these folks, and they get burnt out. And if you have 200 of those, in your inventory, it's a lot of work of just moving this information back and forth. So ingestion of that data from your system, that ability is so important, and getting it right at the early stage where you don't have to have a person fix that data and go line by line and make sure everything is right and it's consistent, is what allows you to have all the automation in the later times. Forget AI. We're just talking about the ingestion process is so important, and getting it done quickly and at the beginning allows for every other automated task later in the claim. So it's all building on that base.
Exactly.
Yeah, no, definitely. I think, AI makes humans better, especially in the case where you're legally required to have humans do the job. So, being cognizant of our goal of wrapping up at the 45-minute mark, we'll hit one final question that we'll ask everyone. So maybe go Chris, Leiling, and then let Dylan wrap it up. But if you were gonna give the audience one operational change to help an auto book under pressure, what is that change that you would make?
can go first. I think
Sure.
the first operational change I would really focus on is again improving the quality and the speed. And I've been talking about this, and this is the key: is the speed of the first claim interaction, right? In claims, the first interaction creates a foundation for everything that follows. The quality of the evidence that are collected, the accuracy, the speed of the documentation, because like to you, David, you said that your claim took 2 years. I mean, there are a lot of factors that are incorporated in a delay, but uh, my focus is really the speed of the first claim interaction, right? And that's going to also lead to a providing a really good positive customer's experience, how quickly the claim can move through this process. And if an adjuster is spending way too much time on this administrative task, they re-enter information, and we think about it like the Gen Zs are coming into the workforce, and we just had a conversation that they don't know how to learn to type. They learn to type through the mobile device and the tablet. They don't do through PCs anymore. And so like being able to provide them these tools for them to do what they do best in the field, that's going to be the key.
Yeah, no, definitely. Chris,
I mean, I think
single impact.
Yeah, sure. I think one of the things I'll say is I just what taking a look at today, what's your availability of these detailed operational metrics? And we talked through a few stories of some high level problems, and being able to have number one, the data to drill down to different things, and then have the your claims people where you can talk through and get their feedback, and hopefully apply some hypotheses of how to resolve the problem based on their perspective and what you see in the numbers. If you aren't able to really drill down through dashboards and other things to get that level of granular data, I think that really needs to be one of the top priorities in your organization. There are some great, again, we leverage some really amazing AI tools, and it's also something that we've done over a long period of time and built on different things. And I don't know that there's something out there that you can slap on immediately and change some of those more foundational problems.
And Dylan, you want to wrap us up?
Yeah. Removing any kind of significant friction points is going to be the biggest operational change I'm looking for. Specifically, reserves and authority granted to the adjusters makes a huge difference. If you, I challenge everybody who's involved with claims and can get data on their claims to go right now, look and see if they have a large portion of their claims reserved or having settlement authority at or just below the levels that your adjusters have in authority themselves. So if they have a $10,000 authority or $10,000 reserves authority, you're going to see that there's a huge proportion of their claims are going to be either just under that 10,000 mark or right at the 10,000 mark, which means what's the likelihood that all these claims are all worth $10,000? They probably aren't, meaning that very likely you're under reserved, and part of that might be issues with settlement authority, meaning that it's probably a little bit too difficult to get the authority they need to resolve these claims. And now they're sitting there under reserved, and they don't have the authority necessary to resolve that claim. You want those claims resolved. That is the end goal. That's going to provide the best customer service. That's going to have the best financial outcome. Everyone wants this, both the policyholder, the claimants, and also the carrier. So why are we holding that back? So that's one of the most important friction points that I would concentrate on. It's going to help you get to more resolution.
So there you have it. 3 solid ways to improve auto books under pressure, improving that first customer experience or the first notice of loss, having better operational data, and, of course, reducing friction and making it easier for the people that are doing the adjustment to have the proper settlement authority. So, if you take those 3 pieces, hopefully that's going to be part of your playbook. So thanks everyone for joining us on the webinar today.
Have a good one.
Thanks.
Well.